webinar series for our Michell University. Today we're going to be working with Infor FACTS, and we're going to be going over the setup for the financial statements. This webinar is being recorded. It'll be available on our website, so you can visit us at www.michellgroup.com to view this as well as the others in our training series. So let's talk about what we call in FACTS the financial report setup. So first of all, we're going to go in from the main menu. We're going to go to General Ledger. And let's actually just run a financial, and then we'll look at the report. So we're going to go to end of period, and we're going to go to our financial reports. So here, let's go and let's take a look at one. We're going to use the current period, and again, for the demo purposes, we're using May of 2013 as our current period. So we're just going to go ahead and select that. Our report group, we can create report groups, which we'll go through today and show you what those different groups are. Let's take a look at them. So in this case, for the demo, I have the Atlanta branch, the Dallas branch, the company as a total consolidated, and the company with each branch separately. I'm just going to grab the first one, the Atlanta branch. But again, I can actually select several and run several at one time, so I can do another one as well. Here, the reports to run. Now, what do I want to run for this branch? Again, I'm going to go here and take a look. And I'm going to go here to add. And I'm going to select the profit and loss account. You see I have these balance sheets and a profit and loss. Again, you can select many of these. So you can run them simultaneously. At the end of the month, you can say, okay, I want to run my P&L and my balance sheet together. I'm just going to run one for now so we can take a look at it. And the report format. These come with FACTS. So again, we have report format number 20 is the period plus the year to date with last year's comparison. So we're going to have these columns. But again, you can select when you want. So you have period with the previous period, with variance percentages, and so on. You can look at year to date versus last year, whatever you like to see. Again, for purposes of today, we're just going to stick with this first one here. So we're going to actually take that. We're going to click OK. And again, like I said, one if I wanted to. And I can have several. So here, and we ask for that format 20. That format 20 is going to show me, let's call this back up again. And how we've got that information. That's what we're using. Okay, let's just back out of here. Okay, so now let's look at some of the setup. So we're going to go in General Ledger into the financial report setup, and we'll talk about each one of these. The first one is called the group report file maintenance. Again, how do I want to group my different financials? Let's open up that one, and let's take a look what we have in the groups. So you can see here in our groups, we have the Atlanta branch as a group. We have the Dallas branch as a group. We have the company with everything consolidated, and we have the company with each branch. Now, when we talk about the branches, that's part of our general ledger. So let's go to a minute to look at that. So in this case, the way we have our general ledger set up is kind of how we're basing this. So if we go here to see if we can, you see here how we have our GL account set up. So we have our GL account set up with the GL number. Then we have this branch. In this case, we have 01 and 02 for Atlanta and Dallas, and then we have our departments. So in this case, we have departments 1 and 2. Again, those are set up, and we do have a webinar on setting this information up if you want to go to our website. But I believe if we just go here and take a look at it, again, you can see here our department set up. So Department 1, Department 2, and we have our 2 branches, branch 001, which is the Atlanta branch, and branch 2, which is the Dallas branch. Okay, so let's go back to this. Let's call up the first one. So I'm going to look here at the Atlanta branch. So this is how we're actually grouping. This is how we're creating our different reports. So we want, when we want to run a profit and loss, we want a profit and loss just for the Atlanta branch. We want a profit and loss just for the Dallas. And then we want basically a consolidation. We want to see them both together as one lump thing. And we also want to see them together, but the separate branches. So on the consolidated, I want to see the Atlanta amount and then the Dallas amount with a total. And then a true consolidated would just have the total together. So that's how we set this up. So we just give this one here a description. This is the Atlanta branch. Lines to skip. We can actually skip lines after each time we do the description. So we can actually skip a line in the format. Consolidating. How do we want to consolidate? So we want to consolidate GL account balances for, you have an option. So we're going to do it for the company, plus the branches, plus the department. So we're going to consolidate this together. Enter the information that you want to see. So what we want, again, since we're doing this for the Atlanta branch, we want company 1, we want branch 1, and we want all departments. So we want department from 0 to 2, because that's our 2 departments. Again, you can look here and determine what you want. Again, you can choose our companies. We can choose our branches, and so on. We can choose our information. And then there's our 2 branches here in the company, and so on. So we can get this information. If we look at the next one, you can see this is the Dallas branch. Again, we're going to consolidate it the way we want to. But you can see here we're using company 1, branch 2, and we're using departments 1 and 2, because those departments relate to the Dallas branch. If we look at the Atlanta branch, you can see the information. If we go here, we're looking at a company and all accounts being consolidated. So again, we're using the company 1 because we only have 1 company. We're using branches 1 and 2, so we separate that with a dash. And then here we say departments 00 through 02 because those are our departments. And then this one here is the each. Now the each one we're not consolidating. We have this blank here because we don't want to consolidate, because what we want to do is we want to see individual totals for individuals. So in this case, you would see the sales of Atlanta and then the sales of Dallas separate with a total. This one here was consolidating. We're going to get the sales of Atlanta and Dallas combined together. Again, if we look here, we can see these reports. So in this case, because we're only getting the sales related, excuse me, to this account for that one. If we were going to have it each, we would have 2 lines here. We would have the sales amount for Atlanta, the sales amount for Dallas. If we combine them, you'll just get the total sales of Atlanta and Dallas combined. So again, how you want to see it on the report. The next thing is the report format file maintenance. Okay. And this is where we actually set everything up. So again, we're going to go here and we're going to look at our different formats. So you can see here, these are the ones that come with facts. This is report 20. So you can see what it's doing out of the box. It's using a period and year to date. Here's the column descriptions. Here's the information it's using. Again, number of periods using is using a max of the 24 periods. It's using a percentage as the base, so we're getting our percentages. And you can see here our percentages, report, and so on. These typically come out of the box. You can actually create more of these if you want, but there's so many of them that I never really had a need to create a different one. But again, you can do here. This is using only a max of 12 periods. Okay, this is the period versus this. So again, here using only 2 periods. And again, you can set these come with facts. There's a lot of them. So again, you would choose the ones that you want. You can see they have them for the P&Ls. And these are right here is B's for balance sheets. So we have that here. Now here is the actual report setup. So let's take a look at this. And this is the actual setting you will do. So we're going to go to reports, and we're going to call up this first one. Excuse me, this one here, the profit and loss. So we're going to look at our profit and loss. So this is what we're setting up. And again, we're just going to, I want to open up this profit and loss in the background, and we'll kind of follow what we're doing here. So a typical, what is a profit and loss? We have our revenues, which is our profit, and then we typically have our cost of sales. So we take revenues minus cost of sales, which gives us our gross profit here, and then we take all our expenses. So in this case, we have these general admin expenses. So we have our total expenses, and our net profit is revenue minus cost of sales minus expenses gives you that. So let's see how this is built. So if we go here, we can see we start with our lines, and these are just lines that you can enter. Normally when I do it, I just, I do line 10, 20, 30. That way, if I want to come back and add something, I can put something in between. In this example, we only have, say, general and admin expenses, but let's say later on we want to add a travel expense separately, then I can go, say, create 95 or 92 in between. So when I create these, again, these come out of the box, but if you want to create one, it's always good to do those lines because you basically have all these lines. You can start, even if you want to do, say, 100, 200, and so on. It's always good to leave a gap because later on, if you want to come and add something in between here, you can go between line 10 and 20, so you can create line 15 or line 12 or whatever you want. So it's always good to leave a gap. So we're starting off this one here. Let's just double-click on it, open it up. Okay, this is simple. This is a type. This is a caption. All right, so we're creating a caption here. And we see lines to skip 1, and we're centering the caption. So that's just our revenue. So it's just a title. So we have revenues, it's centered, and we're skipping a line. Okay, that one's pretty simple. Now here is when you create this, this is the accounts. Now, what we're doing here is we're creating an account type. And what's nice about facts is that in the account format, this doesn't have to be an account that's on file in facts. You notice here it says not on file. That's because when I set this up, I want to allow for future accounts being created. What I do is that I know all my revenues start with 400. So I'm going to say, okay, give me 410, 0000 through 490, 999. Now, I don't have a branch 99. I don't have a department 9. But I want to do this for future use because that way, if you see here in my account, if I want to add something later on, let's say I want to add, let's say I don't have a 412 account, and I want to create a new 412 account, all I have to do is create that in facts in the general ledger file maintenance, and then this report will pick it up. I don't have to come back in here and say, oh, let me add the account. So you can see here, let's see if I can get this to come up. You can see here that, see, I have my account. So my first account started with 410. So I have 410, which is my sales, branch 01, department 1, and so on. And then I have this 4, and then I jump to this 420. So let's say I want to create, down the road, another sales account. I want to create a 412 account. Because of the way I did this, it's going to be automatically picked up here. I don't have to go back and enter it again. Lines to skip 0. That means there's going to be no spaces between each account. So you can see here each account has no space. and then the percentage of the base. Now this one I'm taking line 30, which is going to be my total revenues. Why? Because what I want to do is I want a percentage based on the total revenues. So here's my 100%. So this 98,000 equals 94.1% of 104. I also want to use that as a guide for my expenses. So my cost of sales, 67,000 is equal to 64% of this right here, this 104, this total revenues. So since total revenues was on line 30, that's going to be my base. So I want to use that there if I want percentages. Reverse the signs, I'm turning that on because by definition, sales accounts are credit accounts, so credit accounts show with a negative. I don't want to show the negative on a financial, it just doesn't look right. So what I did is I reversed my signs so all the negatives will actually show as positives. I know that they're credit accounts, and I know that by definition, if I look in the file maintenance of General Ledger, they're going to have negative balances. So I can do that. And then here is add to group total. So I have basically up to these 8 group totals, and I'll use these throughout the system to build my totals. So you notice here, I'm going to use total group 1, and I'm going to print that on the report. All right, so that's this right here. And again, you can see my line 30 was my total revenue, and that's what I'm using my percentages. So here I've got all my sales accounts that start with the 400 series right here. Okay, and again, FACTS puts this little total in, and then here now I have my total revenues. So my total revenues, again, the type of account, it's a total account. So again, I'm total revenues, I'm putting that, skipping a line, I'm skipping a line, I'm basing it on here. And what I'm doing is I'm taking that group 1 total, and I have this roll total. What the roll total is, what am I going to do? Basically, am I going to add something, subtract something, multiply, divide, or do nothing? I'm going to do add, because I'm starting off with revenues. Remember, because I have to take revenues, I have to add my revenues to start, to give me a figure, and then I have to subtract my cost of sales to get my gross profit. So what I'm doing is I'm saying, okay, let's use this total group 1, let's add it. I'm going to clear the total. So what I'm doing is I'm clearing total group 1, so I'm setting it back to 0 so I can use it again. Because remember, what I'm going to do here is I'm going to take the revenues, I'm going to add these up, put them in group 1, then I want to clear it so I can use the group again, and then I'm going to use the total cost again in my group 1, and I'm going to subtract it. So I'm going to say, put this in group 1, 104,000, and then subtract the cost of sales in group 1, so subtract the 67, and that's how I'm going to get this 37. I'm going to take revenues minus cost of sales. I need to clear the total because when I use the total again for cost of sales, I don't want to include the revenues. So that's why I clear the total. And of course, I'm going to print it on the report. Again, you can do this and not print on report. Sometimes internal calculations you may have to do, but you want to print. So there's my total revenues. So again, I'm just building the report. There's my total revenues. Cost of sales, again, line 40 is a caption. So again, cost of sales, skip 1 line, center caption. And there it is, cost of sales here. Skip 1 line. Okay, so now my cost in here, for my cost of sales, I'm using 2 groups. I'm using the accounts that start with 530 and the accounts that start with 640. Again, I can do that. I have my cost of sales in 2 different areas. So again, I'm using all the 530 accounts. I'm using my same concept of I don't have to have the actual accounts on file, but I'm choosing 530.00 to 530.99 in case in the future I add another branch or add another account. As long as they're in that range, the system will pick it up. I don't have to add the new account in my chart of accounts and come back and add it on my financials. Move it to the back there. So again, my base, again, my base is line 30, my total revenues. This is how I'm getting my percentages. I'm not reversing the signs because cost of sales by definition are debit accounts, so there's no reason to do it. And what I'm doing is I'm saying I'm putting this in group total 1. And I'm printing it on a report. So again, you can see that I'm taking the cost of sales, I'm using the base, and I'm adding that to group. So cost of sales, these look similar to these. So the accounts are going to be the same thing. Now I'm using the 640 accounts, same thing. I'm using group totals. So anytime I'm using accounts, I'm just setting this up. So what I'm doing here is I'm saying my revenues are part of group total 1, and my sales are part of group total 1. So the next thing is, just like I did my total revenues, I have to do my total cost of sales. So again, total cost of sales, I'm skipping a line, again, just for report purposes, make it look nice. And what I'm doing is I'm using, again, total revenues as my base because I want those percentages on everything. And I'm taking, again, total to print. I'm taking the total group 1, and I'm subtracting from total group 1. Remember, if I look at total revenues, I was adding to group 1. So I'm adding the total revenues to group 1, and then I'm subtracting the total cost of sales from group 1. That's where these groups come in. You'll see how we change that in a minute. All right. So then my gross profit is a total. So now what I'm doing is I'm using group total 2 instead of 1. I'm shifting, and I'm not rolling any of the totals over. Okay. Since I'm not rolling the totals over, I'm taking everything in group 1 and putting it into group 2. Let's look at that again. So again, total revenues, okay, was group 1, and I'm adding to group 1. I'm clearing so I can use total 1 again. Total cost of sales, okay, again, I'm rolling it into group 1, and I'm subtracting from group 1, and I'm clearing the totals. And then the gross profit is I'm taking everything in group 1, which is here, and I'm putting it in group 2. And I'm not rolling anything over. So that's how I get my gross profit. So basically what I'm doing is I'm just building this account here. I'm saying total revenues minus total cost of sales is my gross profit. And again, I want that percentage here. So I'm taking 104,000 minus 67,000, so I'm getting 37,000. And again, 37,000 is 35% of that line 30, that total revenue. And I just continue building on this way. So again, I have another caption for general admin expenses. And I'm skipping a line. I'm centering the caption. You can see that here. And I skipped that line underneath it. And I'm going to have here, basically, all my expenses. In this case, I'm using 3 sets of expenses because they're kind of in different areas. Again, same principle. So now I'm going back here to group 1 again. The reason why I'm going back to group 1, remember, I need this because at the end of the report, to get my net profit is sales or revenues minus cost of sales minus expenses. So I got to go back into this, again, information here. So I'm doing the same thing. So I'm using group total 1 again. And again, these are just my different accounts. Same principle here. So when I get to my total, again, there's my total. I'm going to skip that in 1 line. I'm still using my base. So again, I'm going to subtract from group 1, and I'm going to clear that total to use it again. So what I'm doing is I'm saying, okay, take the same thing. I'm subtracting. So if you look at my group 1s are total revenues is part of group, which I'm adding to group 1. Then I'm subtracting total cost of sales from group 1, and I'm subtracting total admin, general and admin expenses from group 1. So again, if I look at my net profit, I'm putting that again into group total 2, and I'm not rolling it. Okay, it sounds a little confusing, but once you get the hang of it, it's really not that difficult. Just kind of understand what you're going to do. Like if you're going to create a balance sheet, okay, you know that basically you have all your assets together, and then you know you have on your liabilities, and you know that basically if asset equals liabilities, you know, minus equity. So you want to get those balances. You just got to kind of figure what you're doing. If you have assets and you have a cumulative depreciation, you have to say, okay, I know that a cumulative depreciation gets deducted from the fixed assets. So I would take my fixed assets minus, and again, that's how I would do that. I would subtract from that group total. So you just got to get it, kind of picture what you want to do in setting up. But that's how we actually create this format. So again, what we're doing is we're just kind of going through. Remember, the total here is that we added all that. So it's revenues minus cost of sales to get the gross profit. But to get the final one is it's revenues minus cost of sales minus or subtract the expenses. Now down here you could have had, typically on a P&L, you could have some miscellaneous income and miscellaneous expense. If you had that, you would then say the same thing. You would take that miscellaneous income, you would add it to that report total 1, and then use it to get the profit and loss. Okay, and that's how we set one up. This is kind of set up this way in the system. So we're done with that. And again, you can see here, if we look at a balance sheet, again, typical balance sheet, caption, assets, caption, current assets. Okay, my accounts, this is my total current assets. And then I have a caption, fixed assets. Again, I'm consolidating all the equipment I have, the property, the accounts, my total fixed asset, total assets, and then my captions and so on. And see that total liability and equity, I'm kind of doing the same thing. See here, I'm taking that total 2, and I'm subtracting it. So I'm just kind of building as I go along and when I actually set these up. So that's actually here in the report, the financial report setup. That's kind of the heart of creating it. Here is a report, the layout. If you want to run it, you can actually just look at all your layouts. I'm going to run all of them. Again, yeah, I can choose and which ones I want. I'm just going to run them all. And again, here you can see it tells you what everything means. T is line total, A is add or subtract, S is the reverse sign, G is the totals. So you can see here, this first one we have on file. And again, you can see line 10 is a caption, line 20 is a caption, and again, what's in the caption? Assets, current assets. Line 30, again, is your accounts. Again, you know the A is add or subtract. Okay, the S is the reversing of the signs. The G is the group total. So these two are in total. You see total 2, so we're adding total 2. This is total 2 minus total 1, and so on. Let's go to our go to our P&L. Just look at this one. And again, these are good because sometimes you need to run these because when they're really complicated and something's not adding up right, you know, for whatever reason, all my, you know, I have under my expenses, I may have general admin expenses, selling expenses, travel expenses, you know, all these different subgroups. And they just don't add up right, and I don't really know what's going on. So it's kind of, you can kind of see here and go in. So again, these are my revenues here. See, I'm taking my revenues that are in group 1, okay, and then my cost of sales are in group 1, and I'm just using that to get that group 2 total. But notice here, I still got, again, group 1, group 1, group 1. I'm using all that for my net. So again, this report just kind of helps you when you're in the system. Take a look at it. You can also do a duplicate. This is good sometimes because when you want to create a complicated one, you can just copy it in the example of a new, let's say you open up a new branch, you may want to take one of the old branch ones and just copy it and then make your changes. So here you can say copy from, again, whatever, or we're creating a new P&L. Okay, and this is good sometimes when you want to just play around with it. I wouldn't, the ones that come with facts, I wouldn't start changing these. I would just take P&L and I would say, let's just do tests like this. And then you can click OK. So now we have a test one. So now if we go in here, here. See, now I have my test. So what I can do is I can use that, and I can start playing around with this. I can add, and so that way if I really make a mistake, I didn't, let's say I changed something and I saved it, I didn't mess up the original one. So I can copy that. Or once I get one going, I can then copy to somewhere else. So it's a nice little function to have. Allows you to go in there and actually just do that. I'm just going to delete that test. Again, so we don't have the test one anymore, but it's a nice little thing to do. And I've done that before when I have to really create something that's really complicated. I will take a base one to do it for me. That's in the duplicate. This other one, this report figures file maintenance, this allows you to actually change, again, when we're looking at, say, P&Ls and we're comparing it to historical, we're looking at last year's. If we want to change the figures or add something to the figures, we can do this. We don't recommend doing it all the time, but again, this is good when you're actually going live on the system. So we can see here, let's pick one that has, let's try to find something with some data. But here, you see here, for example, let's say we were going live in the beginning of the year. So we want to have, we don't have last year's figures. So we're going live, let's say on June of 2013. So what we want to do here is these other columns. This would be here the January, February, March. What we want to do is we want to go here and actually plug figures in. So we're plugging figures on this information here, on the columns. We're not touching the actual report. We're just doing it on here. So this is sometimes you may want to do this because from the legacy system, we're starting on June 1, and we want to run a year-to-date. Well, when we run the year-to-date, at the end of June, the year-to-date is going to be June. So we have to plug in, say, the January, February, March, so we can actually just plug our amounts here for the different information we need. So again, this report allows you to do that on here. Again, that's something that you really shouldn't do on your own. You know, you consult us when we do it. Again, it's typically used 99% of the time is when the client goes live. Again, he goes live on January 1st of 2014, and he wants to plug in the balances for his revenues and expenses in 2013. You would do that. You would actually choose the line. Here's the line here. So line 140, what was line 140? We would see what that was, and then here's the amounts. So we would actually do it this way and go in, and again, we can edit corresponding lines. So line 140, these would be the amounts. So remember, in this case, line 140, let's go back here. I believe it was line 30. And I should change the period here. But again, line 30, but here, this line indicates what it is. So the other one we pulled up with figures was line 140. what we would do is that relates here. Again, I don't have a lot of data in my demo here, but see line 140 was a total net profit. So in this case, you would have to go into line 30 and plug the total revenues from January, February, or grab this one and plug them in. But again, that's what that does. It allows us to go in and add that data or change data if something's wrong. Typically, you're not going to make any changes to the data. You're just going to go in and add that to file maintenance. And typically, it's done, like you say, you go live on January 1st, and you want to put in the figures from last year, or you go live in June or July 1, and you want to put in the figures for the first part of the year. That way you can run your financials and it looks sense. Otherwise, you ran your financials at the end of July. Since you went live on July 1, your period July is going to be equal to your year-to-date, so you want to put that information in. Okay, so let's kind of recap what we did real quick. What we're doing here in FACTS, we're talking about the financial statements. We see how to run financial statements at the end of period, but this is where the information comes from. In the financial report setup, you can create your groups. So in this case, depending on how your business is set up, in my demo, I have 2 branches, and each branch has 2 departments. So I created a group. So I have a P&L for my Atlanta branch, a P&L for my Dallas branch, and then I have a combined. And I can do that how you want to set it up. Here, this is the actual setup, the financial report setup. Again, you just build it as you go along. You can see here we're using lines within each line. Let's just add here line 150. Here, again, we can change this line, the line types we saw. We have caption. Okay, the caption is just going to give us a header information like revenues, cost of sales, and so on. We have our accounts. This is the actual accounts that are in the system. We have our totals. So in this case, we want to create a total revenues. So you can see here we had the caption for revenues. We had the accounts for revenues. We had the total for revenues. You can actually do operational stuff, mathematical calculations. You can create consolidation types if you want to consolidate, and you can also put a memo type. Again, you're just typing a specific memo. So these are the types you will do. So again, here you can see how to caption and so on. This is how we have it set up. This is the heart of actually creating the financial. You can use, you can here just print the layouts, so you can print a report. This is helpful when you have a really complicated, say, layout for a profit and loss and the totals are not adding up correctly. You can kind of print it out and see where we are and see what's missing. You can do a duplicate. I recommend this if you want to create a new P&L, copy the old P&L to a new one, give it a name, and then start editing the new one. You can do it that way. And again, the report figures allow you to plug in information. Again, if you go live in the middle of the year, so you can have your columns, your year-to-date will look correctly. Okay, so that concludes our webinar today. Our webinar, again, this is being recorded. It's going to be available on our website. You can visit us at www.michellgroup.com to view this as well as the others in our training series. And we thank you for your time.